Ladies and gentlemen, welcome to Outlook Business Advantage India Chemical Summit. Advantage India is a series of discussions Outlook Business will host this year, deep diving into sectors that have the potential to build competitive advantage and propel growth for the country. I choose my words carefully here. It is growth along with the ability to build competitive advantage. As we all know, the specialty chemical industry has been the focus of attention over the past couple of years, as many Indian companies have seized the opportunity created by the supply disruption in China. The government has also been speaking the same language, trying to allure companies to invest in India by offering fiscal incentives. But are these enough to woo large global multinational corporations to come and invest in India to manufacture or use this as an outsourcing destination? We have with us the biggest and the best players on the panel today. We have Narayan Krishnamohan, Managing Director, BASF India and Head of South Asia. Janardhanan Ramanujalu, Vice President and Regional Head, SABIC, South Asia and ANZ. Rahoul Sawani, Managing Director, South Asia, Corteva Agriscience. Amit Chopra, Managing Director, India and South Asia, Thermo Fisher Scientific. And Ravi, Raghavan, Editor, Publisher of Chemical Weekly. Also, I have with me to co-moderate this discussion, Hardik Joshipura, CEO of Innovassynth Technologies, which is also a partner for the Advantage India Chemical Summit. Hardik, a few words from you and we get started.
Yeah, absolutely. Thank you, Mahalakshmi. And on behalf of everyone, I welcome you. And it's a great our pleasure to partner with Outlook to have these sessions. And I think there are great opportunities for us as a company, as a life science and chemical sector. So I think going forward in 2021, we expect a great momentum in this sector, especially in the life science and the chemical vertical. So I look forward to hear from all of you about the opportunities and some of the challenges which you anticipate as we move forward. Thank you and welcome all of you again.
Thanks, Hardik. So first off, there has been a lot of anticipation over India leveraging on this China plus one sentiment that has emerged in the last couple of years. From a multinational perspective, how much do you think this can really translate into investments on the ground for India? Anybody, maybe Mohan can get started.
Well, China plus one, that's something which I don't subscribe to, because basically comparing ourselves to China at this point of time is a lost cause. So we have to look at what we do as a country, what we do as a country that has a domestic demand, that has industrial capability, that has a certain amount of talent in our country, to what we can do in the context of, like Hardik pointed out, life sciences. That's an area where the country has a certain amount of expertise, but it doesn't have the building blocks or the value chain. So how can we expand our value chains to make that industry more competitive and independent of China? That said, it will also open up avenues for certain amount of exports. But this whole discussion about we will replace China, which I hear in some forums as an alternative, is way out of thinking, in my opinion.
No, I guess the discussion is not about replacing China, because that's not going to happen in the next 20 years. China plus one essentially means China is going to be there. And what is the next destination that you would choose? And at least in that gamut, does India have a fair chance of seizing a higher share of any incremental investment that can come into the region? So it's like a plus one, like, it's not that it's going to replace China, but can incremental flows, out of the incremental flows, can India get a fair share?
I think India has that possibility with our population, with our demographics, with our rising income. If we focus on increased economic value add in the country and create employment, I mean, it's an iterative cycle by way of which there will be wealth and there will be higher consumption. So based on domestic consumption, pretty much opposite to what the Chinese model was, which was based on becoming the world's manufacturing hub, we do have a significant opportunity. And there again, whether it's a government or a company, how you run it is the same. You have to be in a competitive environment. You need to compete with your competitors. In the case of countries, you need to be competitive against the other countries, probably in ASEAN, who are competing with us for the same dollars. In terms of investment, we have a certain advantage that we have a consuming population that's going to rise, and we will have a base load, which is good for our country. So I think the necessary steps are there, or necessary ingredients are there for the country to be invested into, whether it's by domestic players or by multinationals. And it's about creating that competitive advantage within the country in terms of infrastructure, in terms of power, in terms of financing capability, which is all important for any organization to run.
Sure.
Maybe Mahalakshmi, if I can add here, to kind of extrapolate. And if you talk to some of the consultants in, let's say, in the Western world, they would look at China and India as a Chindia cluster. I mean, it's like it's a kind of a region where anything and everything. So there's something where there are no niche chemicals, the competencies which is emerging out. Now with the China, with the different policies in India, which they are rolling out, I especially because of the geopolitical issues in the last couple of months, many of the small sectors who are not into a traditional, let's say, pharma space are also entering into that to get some incentives. How do you see this momentum? Because China is quite big, as you already mentioned, Mohan. Can we, let's say, in next couple of years, come closer to the China in terms of providing the right quality of materials at the right time with the massive infrastructure in terms of manufacturing? How do you see this momentum happening?
So again, I'm no expert on China. I've been there a few times, and I've done a little bit of business there. But what I can say is that it was not built overnight. It took about 25, 30 years for the Chinese to build the infrastructure in all terms, whether it was their ports, whether it was their electrical setup, their roadways. All these things need to be in place, and we will take our time as well to expect that it happens, because suddenly you have a government which is talking Atmanirbhar Bharat, and it's not a flip of a button in our house that the lights come on. It requires sustained economic direction and strategic push in the direction. To give my favorite example, I mean, we had this topics like PCPIRs, which I don't think was a big success in the country. And it's something where we need to relook at it as to what do we do in the area. You can select whatever chemistries you want, whether it is propylene-based chemistry or going out of BASF, something else, whether it's a pharma value chain, a pharma cluster, that you have a public-private participation kind of stuff where you have an infrastructure provided by a central body, and then you plug and play in terms of various aspects of chemistry and operations which fit into each other. In BASF, when we build our large sites, we call it the Verbund sites. This is exactly what we do. We have a master plan and then fit pieces together over time as and when the industry grows. You either backward integrate or forward integrate, or integrate both sides as and when you have critical mass for one or the other molecule in the country. So that kind of a strategy is what I would adopt if it were my company.
Okay.
Sure. JR, Mohan talked about demographics or consumption being an important element that India, because we have the natural advantage of being a populous country, can be an important factor to woo companies here. Of course, right from Vodafone to Amazon, everybody wants a piece of action here because of that demographic. From a chemical perspective, I'm presuming that it will be a long haul to be thinking about ours as a market of scale from that point of view, and wait for companies to recognize that and come in here. To translate this necessary to sufficient condition, what kind of variables would you like to see develop?
Thank you. So
here and now.
One remark before I answer this question. India's strength is derived from its own competencies and not because of somebody else's weakness like China. So we have to look at what are we basing ourselves on, and that is the one we need to look at. Yeah. So now to answer your question, coupled with this in the background, and I'm very specially focusing on the specialty chemicals industry. What are the drivers for this industry? And if you look at those, and I have 6 in my mind, and I will just run through pretty fast on that drivers. Manufacturing, complex manufacturing, Indians are very good. Yeah, so we know how to run multi-stage chemical reaction. We have the skilled manpower to do it, and we can do it, and we are doing. It's a kind of an outsourcing activity because the original molecules are patented by somebody else or branded by somebody else. So it's a manufacturing, we are very good. R&D, most of our companies are $50 to $100 million companies, and they cannot afford to spend on R&D to compete on a global scale. So there is a large room to be stepped up into this if you want to become a player. And the next one, which I'm saying, is application development. The most sophisticated application development doesn't start from India. It starts in the most advanced economies. And if you don't have a reach there, then you cannot develop products to cater to the global market. And this is where the multinationals have a little bit better position, and they're more successful because they have the roots there and they can bring it backwards into India. The fourth one is, of course, sustainability, which is a big investment in the specialty chemical industry. A lot of their molecules have been phased out, a lot of costs related to sustainability, REACH regulation, and everything else. Big companies had the breadth and time to invest. Smaller companies are not able to scale up because these are the cost factors, cost of doing businesses, which is significant coming from sustainability. The last one is, of course, the last two one is most of our Indian chemical, specialty chemical companies, keeping multinationals apart, are family-run companies. They need to professionalize over the next generation. And then they need to globalize their mindset and not be only a manufacturing kind of a complex for them to really reach that level. Last one is diversity. And when you said, ladies and gentlemen, you are the only lady in this group I could see.
That's because it's going to be
yeah.
So recorded. And in the audience, we do hope there will be ladies also.
No issue. We need diversity in our industry to bring different perspectives. This is a men-dominated industry in its by nature. So I think this is the package which needs to look at. We don't have any inheritance rights by the scale of our country or by the demographics of our population. Sure, we have a local demand, but then specialty chemical industries are low capex industries. The manufacturing capex is not, but high on intellectual property. So we have to differentiate. Are we talking about investments to put, it's $100 million, $200 million kind of investments. Most of them can come, but the intellectual property, that needs to come with that. So this is why I go back to R&D, and those are the hurdles we need to get over. And those 6 drivers need to be operated simultaneously if you want to get going and then beat China, which has 3 times the exports of merchandise market worldwide than India. So we are 1/3. So we are not bad, but we could cover more distance. So I stop there and leave you to the other panelists.
Sure, I'm going to have a follow-up question on that. But before that, Amit, Chopra, can you take a shot at the same question? What, in your view, can create the condition for companies like yours to start investing, stepping up investments and looking at us as a larger manufacturing sourcing base?
So, just to clarify, Thermo Fisher has a very diverse range of businesses, and right. Of course, chemicals, laboratory chemicals is one of them, specialty chemicals, but we do have multitude of other businesses. And I'm now talking broadly, not just for the chemicals industry, but also for, broad swathe of our other businesses. And, I would say that when companies look at investing in manufacturing, clearly, domestic market considerations will play a very important role, right? And how do you become competitive in a large market? And usually, if the answer is manufacturing, then that becomes the right strategy for that market. And for the chemicals industry, largely that has been the case. If you look at the multinational companies, whether it was ICI in the past, where I worked for many years, or BASF, I think they have taken a very manufacturing intensive approach. And certainly that has been the way forward. When we look at a broader range of industries, the view from many of the corporate boardrooms, and I'm not saying in general for all, is usually about, is India a big market in itself? And B is India a great place to manufacture for exports? Now, the reality is that a number of organizations have scaled up their manufacturing operations in China over the past 15 to 20 years with a view of basically investing in so-called low-cost manufacturing. China used to be low-cost. It may not be so low-cost now, but certainly that was a view, and there are huge capacities that were created in China. And when we look at countries that have attracted sort of the maximum China plus one kind of sentiment so far, names like Vietnam come to mind, right? Who've been a big beneficiary of foreign direct investment from multinationals who are looking at an alternative to China. So clearly, the perception that is India the easiest place to do business in? Does it have the lowest cost infrastructure and supply chain capabilities? Would you be competitive in exporting out of India if you were to set up a large manufacturing setup there? I think those are questions which I don't think every multinational has a very clear view. I don't think there is a perception gap based on how India was perceived in the past. And I think to that extent, a lot more work needs to be done, not only in actually improving the competitiveness of our economy, but also in driving perceptions with corporate boardrooms and with CEOs, and positioning India as a great place to manufacture in. If we drive a regulatory or compliance-based framework for manufacturing, that if you don't manufacture in India, you won't be able to do business in India, that I think will go to some extent in forcing the hands of companies to drive more localization. But I think for India to be a true China plus one beneficiary, it will have to be more than that. It will have to be driven by the positioning of the country as a competitive, easy to manufacture in, with low supply chain costs, great capabilities on labor flexibility, and great infrastructure. I think that's what will drive those decisions.
Sure, but can that kind of attack really work? That does India even have the size where you can have that kind of leverage, Rahoul, Sawani, on the point that if you force companies and say you need to be able to produce at least a certain percentage out of India to be present in India, can that kind of tack really yield any results at all?
Yeah, so let me maybe, just before I address that, Mahalakshmi, let me just step back a bit, because I think the panelists over here made some really good points, which are key to that discussion, to answering that question. Number one, I think if I take the point that Mohan made, and then that JR and Amit kind of built on, right? So to me, there is an inherent attractiveness given the sheer size, demographics, growing incomes, the trends that it drives in terms of value, consumption, and all of those things, right? Very much holds true. And farmers are looking at growing very much, right? Growing productively. And to me, that forms a basis of an attractive market, right? And if we put that consumer in many industries, or the farmer in our industry, in my industry, at the center of it, right? To me, that's what's got to drive Atmanirbhar Bharat in many ways as a basis, right? I would say the key over here is, then you take JR's points, yes, you have that attractive base, and you start thinking of, okay, what are those key competencies with that attractive base that are going to differentiate India, right? And JR spoke about complex manufacturing. I can tell you, if you take a very narrow view of manufacturing, not as a continuum, but you start thinking of the only individual products, but rather you need to be able to think back in the value chain, think of the multiple steps. In agrochemicals, it's the intermediates followed by a technical, it's the technical followed by formulations. And you make it about, can we get the newest innovations, which are much more complex, which have a lower environmental footprint, which require more complex manufacturing, can we bring those quickly available to consumers and farmers? That itself lends a great deal of momentum to start to put those supply chains into India, right? Because then you have this market available to you, which is attractive. You have products which are, or technologies which are much more innovative, new, environmentally friendly, safe, are delivering value to that consumer or the farmer. And that forms the basis really for you by leveraging the knowledge base you have in complex manufacturing of being able to actually attract companies to invest in manufacturing in India, right? Doing it from a point of view, and then getting to the specific question you really asked me, right? Doing it from a point of view of putting things like duties, to me, is not how you play that game, right? Which is based on India's strengths rather than following a blueprint which somebody else might have set, right? The way to do it might be incentivize, definitely incentivize. What you don't want to do is discourage. And if you discourage, nobody takes the first step itself too, right? So you're discouraging that first step itself. I would much rather see incentivization and driven by innovation and a market that's primed for that innovation. And to me, that's really the formula which our policy regime, regulatory regime needs to be looking at.
Amit, I have not understood your point very clearly. The question is, the government is rolling out incentives. The market, as all of you agree, already exists. And there is some level of competency, like all of you have agreed that there is some level of competency that India has in terms of complex chemistry and doing specialty chemicals in a nice way. Yet there is status quo. It's not that any major investments have come up ever since the tax regime has changed, or what the government, despite whatever the government may be talking about ease of doing business. The fact is that incremental dollar is not coming into India. Now, how do you change this situation is the question. So what exactly do we want changed? Or is there a different prism with which we need to evaluate all of this to be able to bring those investments, get those factories, get the jobs back in India so it propels India's growth forward?
Is the question to me or to Rahoul?
I was asking to Rahoul, but frankly, anybody can take it.
Go ahead, Amit. Why don't you build on that, and I can join it.
No, please go ahead, because I think you said Amit, so probably my mistake. Go ahead, Rahoul.
Okay. So let me give you an example, Mahalakshmi, and to me that gets to the crux of the situation, right? So when you start thinking of, you're right, that farmer base, for example, in my industry, I'll take the example of my industry, and I'm sure you can take similar examples from many other industries, right? Extremely strong growth in the agriculture sector, growing population, growing needs in terms of value, quality of produce. You will continue to see investments coming in, no doubt about that. And you'll continue to see the market itself expanding, right? To me, what's really crucial to be able to really unlock what you described, right, is being able to get those innovations to market. The newer products, more safe, they're more complex, they're more environmentally friendly, and they deliver, on top of that, a greater efficacy and effectiveness for farmers, right? To be able to really benefit them too. To me, if you can start getting them to market a lot quicker than we are today, right? If you start prioritizing those, we go through registration cycles in the agrochemical industry, which can be really long. And over the last few years, they become longer. To me, unleashing those innovations much faster in the Indian market than many other countries would be a competitive advantage, which the resultant of that would be the manufacturing really coming in. So it's not about starting with manufacturing. In my mind, the manufacturing is the resultant.
You're saying essentially scale up the markets, scale up the segments very quickly so that it becomes of relevance to companies to come in and put in those investments. Sure.
and open them to innovative products.
Sure.
New
Ravi,
and innovative products.
you've been listening for far too long. Time to step in with your wisdom.
I have the luxury of never having run a chemical plant in my life, so
and therefore
please,
you can be very critical
take
of not just the government
I
but
tell.
also the companies.
Yeah, okay, I just have a couple of points. One, I think it is fallacious to believe that India should make everything for itself. I think it's in an industry as diverse as the chemical industry is, and in which competitiveness varies depending on what part of the value chain you're operating on. I think we have to be extremely judicious in terms of the kind of investments that we make in the industry. There is now a kind of euphoria that we need to look at the import data of what we are importing, look at the largest volumes of those chemicals and make them here. I think this is an extremely simplistic way of looking at things. Competitiveness stems from a variety of factors, and in at least the commodity chemical space, access to critical raw materials, feedstock, mostly in the hydrocarbon values chain, even till date, is critical. In a country which is deficient in those kind of hydrocarbons, to say that we are going to build plants and then we will have a scenario where these investors will go back to government 4 to 5 years from now and say that, look, I'm uncompetitive, please support me by raising import tariffs, levying duties, levying standards, all kinds of tariff and non-tariff barriers. You will do a great injustice to the downstream consuming industries, and many of them are still in the chemical space.
Right.
I think it has to be very judicious choice of industries that we want to nurture based on inherent competitiveness. And in my view, much of that competitiveness comes if you go down value chains into more, I hate to use the word specialty chemicals because I don't think there is any such thing in this world today. I would say at least complex, a little more complex chemistries. Countries like India and China have ensured that there is nothing special in specialty chemicals. It's also a myth that there is only money to be made in these so-called specialties. Companies, and we have got at least 2 of them represented in this audience, who do largely operate in the commodity chemical space, are exceptionally good at managing those life cycles that those industries go through, and they still come ahead of the game. So my limited point, be careful of plonking government money down holes on which, which are inevitable sinks, and instead be careful on what kind of industries you want to support. And there are a lot of industries that are worthy of support, which need the support and which can benefit. Support, fiscal support is a good thing to have, but it is not a sufficient condition. You need a lot more in terms of, I think, the well-known issues related to infrastructure, related to standards in which the industry operates, rationalization even of land availability today. I mean, I think it's a huge concern today. Where does the industry is to grow at 10 to 12% year on year? Maharashtra and Gujarat are chock-a-block. We have to find new homes for this industry. It will have to be in other parts of the country. Those kind of infrastructures are key, I think, if we are going to attract investments. China is an elephant in the room. Roughly speaking, they are 5 times bigger than we are in terms of the size of the industry. China exports more to the world than we produce in total. I think those are very, very large shoes to fill in. I don't see that realistically happening anytime in the near future. Yes, companies will choose India as an option to sourcing from China, but that's a de-risking approach that any sensible businessman takes. It's gone from beyond sourcing from one company to sourcing from multiple countries. It's an evolution and it's a realization of some of the fallouts that we have seen, disruptions in supply chains. COVID is not the first disruption in supply chain that has happened. We have seen several other disruptions in the past. So my limited point, great to invest in India, but be judicious about where you put the money.
So you're saying that both to the companies and to the government, where government is putting money, is it being wise in the choice of products they are prioritizing?
Well, the priorities have not yet been publicly listed, but I do know that they are looking at some areas in which they are going to be supporting. And as would be expected, there are pressures and counter pressures to, add my product and this product and not that product into those lists. But it's crucial that we don't end up. I've seen this industry for too long, and inevitably, what happens then when you have these compromised competitiveness, then there are these pleas for other kinds of support, which is a never-ending story. I come back to my point: don't jeopardize the industry, the downstream industry's competitiveness, by raking up their availability of raw materials and chemical inputs. So that's something I think very important, because I think that is where India's true competitiveness lies.
Fair enough. I can see JR smile there. So you can come in on what makes you smile in this rather.
I think, like so many valuable inputs, but just to, because, again, I want to remind all of us, this is specialty chemicals discussion. So I am putting this in the context of specialty chemicals. It's not.
Yeah, do you still think there is a specialty chemicals business in this world?
He's saying there's nothing complex specialty anymore.
I grant it to Ravi, complex chemistries. Yeah.
Yeah.
So in this, so there are three things if you are wanting to attract investment, which will drive again. One is there a domestic demand growing so much you don't have capacities that you need to put? Secondly, are you exporting and you want to export more? Thirdly, the easiest one, which the government sometimes keeps looking at, is import substitution. Well, let me tell you, the specialty chemical industry manufacturing has a lot of hidden capacities. These are batch processes, straight reactors. These are not big assets. So if you want to add modularly, you can add at very low cost. So you cannot see big headline numbers coming. Yeah, just by adding $2-3 million, somebody can create capacity of 20,000-30,000 tons of a certain class of chemicals. So you will not see it, because if they increase the shift already, they can fulfill whatever India needs. And exports, there are some industries where the world is saturated. Let's be very clear. Textile industry is not growing more than 1-2% in the world. It's a saturated need. So can you keep exporting double digit of textile industry, dye stuffs, colorants, which is related to that industry? Then you need to snatch it from China. That's not going to happen easily. So the last one, which where the government focus sometimes ends up is for quick wins, is can we see import substitution as the driver? And as Ravi said, sometimes the barriers are raised, in terms of tariffs, in terms of standards, or something which is just to probably, like as Rahoul said earlier, to try to make them, or the other panelists said, to make them in India. In specialty chemical industry, know-how is the biggest barrier, not even raw material. In the final product costing, the raw material is a much smaller component, but the availability is a key component. So many of our import basket actually facilitate our exports. So the quick win, which we normally are used to looking with an incentive, will take a little bit longer time in specialty chemical industry. So we can't give up hope on that. It's just that, you won't see it in 1 to 2 years' time. You would see it gradually.
Sure. Mohan, can you come in on in agrochemicals? I mean, you had a plan to put up a large capacity. COVID has changed that plan. So what went in favor of putting up those capacities in India? Is it because of a certain product which has achieved scale, so it made sense for you to come in? Were there any other factors? Where does India really score, and where did it not score for, say, investments decisions that you might not have favored India?
I presume you're talking about our investment that we talked about in a joint venture with the Adanis at Mundra, which is on hold. It had nothing to do with agrochemicals. It was basically a bulk commodity chemical in the propylene value chain, ending up into oxo alcohols and plasticizer alcohols and acrylates, which goes into the field of, for example, the largest market would have been in the paints industry or the paper industry. dispersion. So there, definitely the size of the market and the growth of the market and the technologies which are being used today by the big paint companies, which are more conducive to waterborne paints rather than solvent-borne paints, creates a demand for those chemistries. And that was primarily the driver for BASF to look at India as a destiny. And BASF believes in investing in markets where there is demand. So we go more closer to the markets. Like Ravi pointed out, there are two options. In hydrocarbons, you can go to the source or you can ship the hydrocarbons to the market. Now, both cases, there are different companies which adopt different strategies. For BASF, for good reasons, strategically always prefers to invest in the markets where the markets are, rather than investing on top of a gas well or an oil well. So with that philosophy, we saw that India had the critical mass for that chemistry in a joint venture with a couple of other companies, which would then take the propylene molecules into polyprop, which is again a bulk commodity chemical. However, with COVID and what happened in terms of capex across multinational companies, the visibilities and the kind of idle capacities that are available in the world in terms of these molecules, it made sense to put the project on hold. So our partners requested that, and we went along with them. No point in then having a subscale investment for this market. So that was that decision, and we saw the market and the market growing in that context and able to produce. And these chemicals, typically you don't grow in a linear way. I mean, you put up big capacities and you fill it up over time. And the fact is that we were long due to invest into a new asset, given all our plants were sold out. So if you would invest this, takes a couple of years, it would also release us capacities in other plants to grow in those markets by replacing the products we are importing today into India. So that was the whole philosophy behind this.
Mohan, if I may pitch in, I think one of the questions which occurred to me is, when you look at the BASF globally, I'm sure globally they must be outsourcing a lot of products from India and also across Asia. I mean, with a lot of, since you are into multiple different chemistries, right, from automobiles or to specialty or complex chemistry or to pharma, do you see any challenge of patent expiring of particular molecules, which is actually driving the value of the products down? And how do you really compete with some of the, let's say, Taiwanese players or maybe a Chinese players to an extent? Do you see some kind of a gap there in terms of continuing those products because it's not price competitive anymore?
Well, every product has its life cycle, and I think Rahoul is a better person to talk about this than me, coming from the industry, because I come from the upstream petrochemical industry. But the fact is that, yes, we all are faced with some challenges at some point in time with expiry of patents. And at that point in time, the valuation of the product does go down, the competition increases. So it's a supply-demand kind of situation. And then you do have a decline in margins. The question is, how do you reinvent your products? How do you make sure you extend the life cycle of your products to keep yourself going? And yes, you're right. That someone mentioned earlier today that the whole premise of China's existence or Taiwanese existence was outsourcing based on lower costs. So yes, that's what they fight on. We fight on technology and improving the product aspects. And there may be minor innovations. But what I see over the last 25 years that I've been in the industry, that the fundamental new molecules coming out is much lower, but the incremental value add in terms of formulations and development of products, that has a fair amount of value, extending the life cycle of these products. Rahoul, I think you should pitch in on this one. Help me out, man.
Great. Absolutely, Mohan. Happy to do that. So a couple of things I'll build on from that question and what you said, Mohan. So number one, right, and this holds true in many industries today, right? You kind of start thinking of the footprint of products, right? In the agrochemical industry for us today, it's not about how much manufacturing. It needs to shift to actually the direction is the opposite. How do I reduce the amount that's being used, yet deliver a more efficacious product. And what does that require typically? That requires innovation in that R&D end, and it requires a much more complex manufacturing to scale up, right? And to me, again, the basis of all of this comes down to, is that what you're going to look as your formula to success? And manufacturing really becomes a resultant of that, right? Now, I can tell you from a life cycle standpoint, and for us at Corteva over here, our business model is very much driven by innovation, right? R&D and innovation is absolutely key. And if I look around the panel, you will notice that in many of those companies, JR spoke about application development. That application development that he spoke about is really innovation too, right? And many of us are driven by that R&D and innovation, not just scale, right? To me, it's the reality we deal with, that yes, life cycles will change, right? And how do we upshift to more value adding products that are differentiated through R&D and innovation, and provide a great benefit to be able to really get a benefit to consumers, downstream industries, or farmers in our case, in the agrochemical industry. One thing that's really interesting, right, is as this shift towards value takes place from volume of manufacturing, you also, Mohan was speaking about the CapEx needs of companies today, right? And the pressure that we've seen on CapEx across the world with companies. And I can tell you, you have to think of manufacturing also in a different way, right? So multiple times, there will be sourcing commitments we make, and we start these early in our R&D pipeline. When we start looking for partners in India, and we're doing this right now, we start looking for partners in India for those new innovations, where those partners are the ones who are going to scale a manufacturing for us. It's getting them newer, innovative chemistries, knowledge, which is much more difficult to catch up to. And that, to me, is also manufacturing. Those sourcing commitments, technology transfer, is also manufacturing that is being enabled by much of what we are doing. So I would broaden that definition of how we think of manufacturing from not just purely did a BASF or did a Corteva put this much capex in the ground in a very large scale, right? It's a very different definition in many ways.
Absolutely fantastic point that you have brought in, which I was about to bring in. You know, even in healthcare and several other industries, there is a huge amount of trust deficit that the Indian companies and Indian ecosystem face with multinationals. So that's also one thing that has prevented a lot of multinational companies from bringing their best products here, or putting up manufacturing, getting their capabilities, or putting in excellence centers here. So how big is it right now? I want a very honest, candid view of all of you. And how do we really bridge this gap? Some part of it I understand is cultural and it'll take time and all of that. But even then, we need to start thinking of a solution and taking firm steps in that direction. So JR, on the trust deficit and how do we bridge?
So I'm going to surprise you. I think I would completely disagree with the statement that there is a trust deficit in India. Just look at the list of multinationals which are flourishing in India, which are research and development centers in India, developing know-how. That's a key indicator of trust. We have one of the largest chemical research centers in the world put up in India at $100 million. That was, and subsequently we invested. Everybody in this panel have such, I mean, those are manufacturing, have such, and I could go with a list which is so long, not just from the chemical process industry, but including the engineering part of the chemical industry. So I think that's one of the biggest tick marks when you want to compare yourself against China and feel good about something.
Okay.
This is one I feel good about. So I leave it there and see what others want to say.
China here is a bad comparison. Let's have better standards. Mohan, do you agree with JR? I know you will. I mean, brotherhood is going to...
more than brotherhood. It's like we've invested into global research centers here as well. So and these are not isolated research centers. These are globally networked research centers, with the US, Europe, China, and India being the parts of it. We have plans to continue investing in this field, and not just our own research labs, but we also collaborate with several universities. We do grants, we do scholarships, and so on and so forth. So there, I think in terms of intellectual capability and property protection, reasonable amount. We are not there in the IP framework. I will not go into that because then we get into a completely different direction. But in the context of research and investments into research, I think we have all the necessary ingredients for success, and this will only continue to increase in the country. The fact is, today it's highly focused in the chemical industry on life sciences, because we do not have as much into the other parts of the chemical industry. So there we need to invest more into process technologies. It is a lot of it is known, and the fact is that if we have to invest in most plants, we need to get back to, I mean, even today, I mean, just think of it, JR. I mean, if we were to invest in a PP or PE plant, bloody commodities, we still have to go to Shell, no, for the technology. Why is it that we don't have our own technologies for some of these things? While we talk about China and the inevitable comparison, the Chinese Design Institute, a lot has been said about how they get technologies, so let's not go there. But the fact is that today there is a fair amount of technology available with them where they are not dependent on licenses, and they have developed chemistries. I mean, BASF's own founding chemistry of carbide, the carbide acetylene for C1 chemistry. This is now available off the block, and the Chinese have worked on this, and we have actually discontinued that process because it's not sustainable in our books. It requires too much footprint, and we have gotten out of it. But in China, they have endless amounts of coal, so they do this coal chemistry very successfully. Probably not as clean as we would like it to be, but it is it's something where their strength is, and they leverage it and those technologies. So we need to look at that in that perspective, that what kind of technologies should we indigenously prepare. Now, a couple of examples, whether it is amination, whether it is hydrogenation, if you take these as basic fundamental chemical reaction, we should not have to be dependent on these reactions abroad. I mean, many of our Indian companies are doing it, but we also need a systematic university collaboration where it would be worthwhile, available to the larger masses.
Sure. Hardik, would you have any questions for any of the other panelists?
I can kind of relate to the challenges or the pain points which I had when I was into R&D or into manufacturing. I think what is emerging out here is a couple of points, and one, as Rahoul mentioned, is a niche chemistry or a technology-driven research. That is one way. What Ravi did mention is, we cannot really necessarily make everything here, and that is what companies like ours, we face challenges. Like we make products which are 20-25 steps, and whatever you do, you need to depend on China. You can't get it easily, some of the molecules from India. So the biggest challenge what we have right now is, how can we be a self-reliant? How can we really make, and is it worthwhile to make those products? A product which is available, let's say at $100 in China, our costing comes to more than $300 for whatever means. So I think that is something which is certain niche chemical sectors which we have not yet touched base. Like we don't have the core competency yet developed. But I think, coming back to the overall things which is emerging out, we need to be a technically niche players. At the same time, if you look at the localization strategy which we talked about, and I'm sure probably Amit can answer this from his experience, because Thermo Fisher actually addresses and caters to multiple different companies. There are challenges when you talk to pharmaceutical customers or some of the specialty complex CMO. They would need a product with all the regulatory requirements and really not depend on China at a different price point, which is comparable to China. And many of the peers of the big life science companies or competitors of them, they have really done the localization strategy. So Amit, how do you see in Thermo Fisher especially? Would you do you kind of anticipate that the localization strategy where India for Asia or India for India would actually work to serve your customers to offer products which are price competitive and to meet the regulatory requirements?
I think the focus for the company has been in terms of manufacturing for the past decade plus has been China in Asia Pacific. We have done a lot in India, and within our peer group, we have the highest, biggest manufacturing base in India. But nevertheless, when I compare to China, we are much smaller. And I think, again, I go back to the earlier points I made. The ability for the country to be an export hub largely depends on how competitive can you be in manufacturing. If you look at our API story, right? We lost the API plot in the 90s to China, right, because they were so much more competitive than us, absolutely, right? We just lost the plot, and now we are trying to bring it back by the PLI scheme. And that will affect, down, upstream all the intermediates as well, and that's the opportunity for all of us.
Right.
But I think the core aspect, and I think I want to reiterate the point, the core aspect of for the country is the ability to position ourselves as a competitive, easy to do business in with great infrastructure. I think those are essential. Essential for any multinational to look at India very, very seriously. Of course, it varies from industry to industry. Of course, it varies from product line to product line. But by and large, those are the critical aspects we need to fix.
Thank you.
Sure.
Thank you.
Anything else, Hardik?
So maybe a question to JR. I mean, yours being a large company which offers products from different industrial sector, right, from agriculture to electronics and also consumer goods and healthcare. What are your kind of a specific localization strategy, and also how is the kind of a talent pool what you have is supporting that strategy? Do you have some kind of plans to really make it India kind of an initiatives?
Okay, so I think again split it into, we are in the full spectrum of chemical industry. So the upstream, really upstream crackers, this is a feedstock topic, very different from what would you say from our specialty end of it. Yeah. So from a specialty end of our business, I'm addressing only that part of it now to your question. Again, the big question is, if you're in hydrocarbons, it does not matter whether it is commodity or specialty. You will, if you don't use C1, C2, C3, C4, you will need C16, C18, C20. This still needs to come from a hydrocarbon footprint. So if you don't have a cracker complex to start with, then the whole value chain cannot be addressed. So the way our specialty chemical industry in India is operating, that's where I'm coming to, is that they need to source this from wherever it is available to make whatever specialty products, because you cannot source C16 without it coming out from a cracker. So somebody somewhere in the world has to provide that to you if it is not available locally. So going to the next step of your question, where I would see it's important, not just for SABIC, for India as a country, is there is, I would call it a strategic self-sufficiency, Atmanirbhar Bharat, which is if you are to source a product which is only available from one country, be it China or anybody else, you need to do something, if it's an API or any other industry, to make yourself strategically self-sufficient, and that needs a different set of drivers. Maybe a PSU needs to invest into it. Yeah? And if you're looking at Atmanirbhar Bharat from a kind of a forex kind of a part or a job creation locally, then that needs to be based on economics.
Right.
We don't need to teach Indian entrepreneurs if there is money in some business, they will run to it. So the policy intervention is not, like by raising hurdles, it is to encourage people to find such opportunities and to facilitate fast. Let me give you an example. Last 3 years, whenever I'm with the chemical industry, with the government, one of the standard asks is that, like if you change a product slightly, we need to go to the Ministry of Pollution, Environment and Pollution Control to get the product approved before I can do it, even if it is very simple. I'm willing to accept umbrella levels of be it discharges, but allow me the flexibility. This is a challenge for specialty chemical industry in India. So I think the Atmanirbhar Bharat, we need to look at it from a strategic point of view, from an operational point of view, and from a point of view of facilitation and policy from the government.
Thanks, Zia. Maybe a quick question to Rahul. Rahul, you did talk about leveraging the R&D footprint. I mean, then since agriculture being the core of what you do, what are your broader innovation strategy, to support also the unorganized farming sector in India? I mean, is there a kind of a global corporate view on that, Rahul?
Yeah, so great question, Hardik. So I would say very much, given the nature of our industry, right, localization becomes really important for us. India, when I look at our presence in India, right, it's very much seen for many of those factors that we spoke about earlier, right? The demographics, the growth in terms of consumption, as well as quality requirement, which will increase value over time, protein consumption that will go up. Right. All the trends are extremely positive, right? So it's seen as a really attractive market in terms of potential, right? And the key word over there is that potential, right? What does it take to unlock that potential is what this comes down to. Right. We are taking a bet on it. We've invested in R&D, both on our, we have our agrochemical side, multiple products that are being developed at various stages in India, being tested at various stages in India too. Multiple new products from our pipeline that we are actually, that are not even launched right now, will be launched over the next 3-4 years, where we are already working with local Indian manufacturers to be able to build the capability to produce those products in India. Right. Where we do need support, right, is getting the ability, and this comes down to a very similar point that JR made earlier, right? It comes down to, is there a regime in place? Is there, do the regulations and policy frameworks allow us to move a lot faster, right? So in case I am going to be the 50th country to launch that product out of Corteva globally, right, am I going to really produce it in India and for other countries? Not really, right? How do you get that acceleration of those new R&D molecules, which actually from every aspect makes a lot of sense. It's good for the farmers locally. It's way better in terms of environmental footprint. They are much safer. Yep. They are more complex, and because they're more complex, they're much more hard to replicate, and you're building a capability that will be very differentiated from other countries, right? So it's not just a shift that's taking place every time. Right. And to me, being able to, we see a recognition of that in the policy frameworks. Of course, there is more that needs to happen over there, right? In all the conversations I've had with stakeholders, there is a recognition of that. What needs to start to take place is those incentives, but more than even incentives, getting our policies to be able to move much faster on these, being able to give much more certainty. And then, of course, like Amit said, those basics of infrastructure and everything else absolutely have to be addressed. Without that, there is no way you would be able to scale this. If we are able to do that, Corteva globally is betting that India is going to be able to do that, right? And that's why you see us working closely with many of our new innovations with Indian partners to be able to start working with them even 4-5 years before launch. So there is positivity rather than anything else. And to me, it's about how do we work with stakeholders, policy stakeholders, with academic stakeholders to make that a reality now. The potential definitely exists, Hardik, and we are betting on that.
Thanks, Rahul.
Thank you so much, Rahul. I'm sorry, we have overshot the time, and I'm really apologize for this. I really hate it when we don't stick to the time that we set for ourselves. But still, I need to ask this last one question. Everybody, in just under 60 seconds or maybe 30 seconds, articulate one push that you would want from the government over the course of the year that can put this industry forward. One key thing where the government can intervene for the cause of this industry. Ravi, can you take a shot first?
Make land available, ease environmental regulations, broadband them, let entrepreneurial spirit reign. I mean, I think in the industries that the so-called fine downstream industries, I think India can be hugely competitive. China plus one is a legitimate strategy that is here to stay. The cost base of chemical manufacturing in China will rise. India will be a viable option.
Sure. Anyone can go next. JR?
Yeah, I think, to achieve the speed, there's only one simple hurdle. If we can change that, I think a lot more can happen in specialty chemical industries. And that my recommendation and ask is that the Ministry of Environment need to have a special cell focused on specialty chemical industries. We cannot have a headline because their needs are very different and upstream chemical industries are far simpler. So I think they need to put that group together to understand the specialty or complex chemistries, as Ravi would like to put it, and then deal with them faster. That's the one recommendation and ask, I would say.
Sure. Amit?
I would say broadly, I think panelists have already covered some of the points, but it would help to broaden the PLI scheme, right? If you are incentivizing manufacturing and if you are going down that path, then clearly there's a lot more potential to attract investment through incentives. And I think there's certainly a lot more potential in the specialty chemicals industry if the PLI scheme were to be broadened. So I think that's one opportunity we have.
Okay.
Couple of things that I would look for. One is in the context of infrastructure and chemical parks. I think chemical parks make a lot of sense. I mean, Ravi talked about land. I would look at it holistically in terms of land and infrastructure, where the government could facilitate these things, and you have some kind of effluent treatment central park, which is functional. There are a lot to name, but in fully functional infrastructure with plug and play for the smaller units. The second thing, what I would ask for is kind of a level playing field in terms of imports and exports. So I'm not big in terms of barriers because I believe growth is what is more important, and we are on the premise of growth. Hence, we need to we can't invest in everything at one go. So we need to allow international trade. And in that context, having a level playing field where we are competitive with our regional counterparts and our competing markets is what I would ask for.
Great. I can go ahead, Mahalakshmi. So I'll keep it really short because I think you had a great list from all the panelists, which I absolutely agree with all of them. For me, the only addition I would put in on top of that list is what I would describe as fast tracking, right? And fast tracking of innovation. What that means to me is when we think of approvals, getting approvals for newer chemistries, newer molecules, changes to those in a much fast track way, with things, with provisions for incentives, like Mohan spoke about, provisions for incentives for local manufacturing, rather than go out down this pathway of disincentives or customs duties and things like that. And while you're doing that, really being able to look at manufacturing holistically, which means partners as well as companies that are investing and whether new technologies are coming in. I would say policy framework that allows for those things and a regulatory framework that allows for those things is key to it, Mahalakshmi.
Sure, absolutely. I couldn't agree more. Fast tracking it is not only for the specialty chemical industry or chemical industry, it's for all of India. We close this conversation right here. Thank you so much, gentlemen. It was a pleasure speaking to all of you.
Thank you, everyone.
All.